Welcome to Unfoolish Investing, your go-to podcast for insightful analysis on the latest financial news and market trends. I'm your host, Victor.
I'm Larry.
And today is Wednesday, November 20th. In this episode, you got to get the date in there, Larry. We'll delve into the recent earnings reports of two tech giants. Can you guess them, Larry?
I think one of them is definitely going to be NVIDIA.
Yep.
Because they reported earnings today. And Snowflake.
That's right. NVIDIA and Snowflake will explore the positives and negatives of their performances and discuss how their stocks are reacting in after-hours trading. Let's dive in, shall we? NVIDIA, the renowned leader in AI and graphic processing, or the company I least understand as to how they went from 400 billion to 9 trillion or whatever they decide they're going to make the money worth today, in graphic processing, released its third quarter earnings today. The company reported a remarkable revenue of 35.8 billion or 0.8 billion, a 94% increase from the same period last year. Net income more than doubled to 19.31 billion. These figures surpassed Wall Street's expectations, which had anticipated adjusted earnings of 75 cents per share on revenue of 33.17 billion. Larry, what's your take?
I mean, if you're just looking at that one quarter in a vacuum, it's a good quarter. Better than a good quarter. You know, expanding it a little bit, if you look back a little bit, the growth is clearly slowed down from last year, the year before.
Because the 94% increase, it's great, but it's significantly less than they've done the previous 4 quarters.
Correct.
Is it a buy? Is it a hold? Are they doing well? I mean, is a 94% increase not solid? Or were we out of control before and now we're getting back into reality?
You know, I buy it every week. I've bought it every week for years, before this AI thing took off, and I haven't stopped. So I'm probably not going to stop. I don't know if I would be opening a position here after this huge, 10x run that it's been on. But I don't see the harm in adding if you're already in a position.
Yeah, I mean, if you look at NVIDIA's data center revenue alone, that soared to 30.8 billion, which was up 112% year over year. I mean, that surge, you can only put it's high demand for AI solutions.
One of the things I like about their data center revenue is I don't see NVIDIA as a complete one-trick pony anymore, where before it was just, it was like just the chips, just the cards. They're kind of expanding. I think what they're trying to do is get sort of an Apple-ish type moat where you get into a suite of NVIDIA products and it's a lot tougher to leave. I think the data center is part of that for them.
Yeah, and I mean, if you look ahead to NVIDIA's Blackwell AI chips, which are generating substantial interest, I feel like production shipments, from what I understand, are scheduled to begin fourth quarter of next year, with demand expected to exceed supply. But will they deliver? Is this Tesla level promise that we're only going to set up for failure? Like, oh, you're going to own a self-automated car in 2025. No, I'm not.
Here's what I'll say. Most of the other Mag 7 stocks are NVIDIA's biggest customers. They haven't stopped buying. I think the stock will keep going up until at least one of those companies either slows or stops buying. And I don't know when that's going to happen, because it seems like they're in such a arms race, so to speak, to have the biggest and the best and most robust AI for their companies, that I don't see it slowing down. Maybe by the end of 25, you might see some of that start to drop off if one of those companies were to introduce their own chip, which I think at least Amazon and Meta are trying to create their own solutions so they're not so reliant on NVIDIA. But I don't see that happening in the immediate future.
Yeah, I mean, to that point, I believe both Meta and Microsoft are actively developing their own AI chips, to kind of take NVIDIA out of the equation. Meta has also introduced the Meta Training and Inference Accelerator, which is a custom designed chip aimed at improving the efficiency of AI training and inference tasks. I'm not going to say that they don't take off, right? At some point. But to your point, I don't think it's next year. And,
Yeah.
I'm just going to put it out there. Zuck, I don't trust you. I'm never going to trust you. I just don't see what you're going to do other than take my data and try to make money off of it like you've done and exploit the end user. That's my hard issue with Meta. Microsoft, I have a little more faith in. They've unveiled 2 proprietary data center infrastructure chips designed to accelerate AI application and enhance data security, which I do think is a strong focus and a smart area to be focusing on. Because one of those chips, the Azure Integrated HSM, is set to bolster server security by securely managing encryption data. And as a cybersecurity manager, I love that. I love the fact that Microsoft is developing these tools, these platforms, and their focus on security of your data. Because I feel like they've learned a few lessons. And they're taking a few pages from Apple's book.
Yeah, I think Apple's the kind of the end state goal that every other company wants to be. Between their products and their offerings of services, it's very tough to get out of Apple once you get sucked into it. So I think that's what Microsoft's certainly trying to do. I think that's what NVIDIA is trying to capitalize on a little bit.
Yeah, and in closing, I'd just say that NVIDIA in after hours is down roughly 1 to 3%, which basically tells me that earnings sort of met expectation, that didn't do anything to deserve a boost, and a 1 to 3% pullback to me is just flat. That's just the stock being flat. It's not a dramatic shift in either way. So, but again,
yeah.
If you're looking to open a position, I'm not sure this is the place that you do it.
Yep, totally agree.
Do you have anything else to say around
Unfoolish?
Go ahead.
If you follow Unfoolish Investing, philosophy, you already have exposure to NVIDIA in an index fund somewhere. So I wouldn't feel too bad if you didn't have a standalone position. But like you said, if you have one, I'm totally fine adding to it.
Agreed. Anything left to say about NVIDIA, Larry? Let's pivot on over to Snowflake. The data cloud company also released its third quarter earnings today. The company reported revenue of $942 million. Not quite 30-ish billion, but still a lot of money. Surpassing analyst expectations of $899 million. Adjusted earnings per share came in at 20 cents, beating the anticipated 15. Snowflake's product revenue, encompassing compute storage and data transfer, rose 29% year over year to $900 million. What are your feelings on that, Larry?
Honestly, I was kind of shocked. I had just about, I'm a Snowflake shareholder. I have been for a while. I was pretty much about to write Snowflake off as kind of a lost cause, with, Palantir being in a similar space and having gone up so much. Snowflake really seemed like they were bogged down and were going to be bogged down for a while. But this quarter seems to show that, I certainly think they're turning a corner after this quarter. So positive news. I'm probably going to stick with it now for a while.
Yeah, I feel like this growth underscores the company's expanding customer base and increased usage of its platform, which are just a win and a win. And it's been a hard loser, and I feel like the last year continued to go down. Yeah. I will say, Unfoolish Investors, that when you start to see these pullbacks, yes, it's tough to pull the trigger on a stock that you may own, it might be down 45%. But that's when you have to go in there. You have to look at the fundamentals and you have to say, is the reason I invested in this company still there? And look to
Yeah,
add.
exactly.
I feel like Snowflake, also projected fourth quarter product revenue between 906 and 911 million, which again exceeded Wall Street's forecast of 882 million. The company just continues to raise its full year product revenue and looks to be coming in somewhere around 3.5 billion, maybe a little bit less, maybe a little bit more, from the previous 3.3 billion. So for me, I may not add on the 20% potential jump, but if it pulls back a little, I may go in and gobble up a little.
Yeah, to your point, it's been a tough go for them lately. They're down 35% for the year, where the S&P 500 is up 25%. So if you've had it and you've held on to it, now that it's kind of showing signs of life, you might as well hold on to it.
Yeah, and I mean they kind of have those shades of in AWS in the early days where it's just spending a lot of money in order to continue to build out their infrastructure. I only say that because Snowflake reported a net loss of a little over 320 million for the quarter, which was far wider than the 200 million-ish that they expected to lose. So that's not a positive.
No, it is not.
But is it just a sign of reinvesting, continuing to reinvest back into the company as they continue to grow?
Yeah, that was what the new incoming CEO said when he took over, was that they were looking to keep growing and expanding. It seems like some of that's starting to pay off. They added some customers, which was great. They added 370 customers, I think. So they've got almost 11,000 customers, like 10,600 and something. So to your point, it does kind of feel like AWS in the beginning, which is a good thing. The downside of that is when AWS was in the beginning, there was no current AWS to fight with. Like Snowflake has to compete with AWS today.
Yeah, and I think the other positive I'm kind of looking at is Snowflake's been down roughly 22 to 25% over the last year, and I'm looking forward to market opening where if things stand, I'm looking at getting 20 of that percent back, which definitely it helps with my breathing.
It'll be interesting to see the market reaction. Because are people going to say, oh, it went up 20%, I got to get out while it's up? Or to your point, does it hold? And you can kind of say, all right, we've got this on somewhat of a firm footing here.
Agreed. Before I let you go, SoFi.
I'm telling you, it's been on a spree. Like even I couldn't believe it, and I've been one of the biggest SoFi bulls out there. We had a short, that you put out that, we were closing on 15 for the year, which basically is double from the video that we posted about SoFi, however long ago it was, a month or so ago. So on a huge tear, doing great, feeling good. I'm wondering how much higher it could go in the next year. Like, do we already have the year of gains priced in, or do we have more room to run? What do you think?
I think it really depends on the market and the levers that pull. I think we've talked about it in the past. I currently look at this economy as we spent the last 3 years coming out of COVID, stabilizing, the Fed making decisions, making sure that we didn't explode and hit a recession. So I see us about 300 feet off the ground. And I feel like unless some dramatic levers are pulled in the economy, I'm feeling really positive about the banking sector going into the next 18 months.
Yeah. Yeah, I think banks, you kind of saw it a little bit after the US presidential election. You know, the whole market rallied. But I think banking in particular sees potential, you know, easing of regulation as a huge boon. So I do think stocks in that space should do well, if the administration can not do anything stupid, basically. I don't know how else to say it.
Yeah, no,
If they can restrain themselves and just let it play out, it'll do well.
Warren Buffett has got a great saying, be greedy when others are fearful, be fearful when others are greedy. And right now, where I'm at with this current market, we're standing right below 6,000. Most economists, most market professionals expect the market to hit, the S&P to hit 6,800 next year. So that's really not that much room. That's not.
I mean, it's a 10%. It's a little over 10%.
Yeah, it's not a 15 to 20% boost that I feel like everybody's been used to over the last few years. So, breathe.
Yeah.
Breathe. Breathe. And I really feel like if you are unsure of the prices of NVIDIA, if you bought SoFi at 10 and it's up 40% and you see it hit the 15 and you're like, maybe I'm going to take a little bit of profit, just a little bit. That's a little over a month to get 50, 60% back on your money. That's a good chunk of change. And I tell people, don't be afraid to take a little off the top, but also you got to let your winners run. You have to let your winners run. Yeah. And that's where I kind of look at SoFi. I mean, right now, I think I owe SoFi somewhere around the $8 mark. It's been a lot of bad years, so I'm looking forward to the positive.
Yeah, it's been a ride with SoFi. I feel like we started buying it at like $12, $13. It went down to, I think, under $5. I think I got a nice amount for in the fours.
Same.
And now it's roaring back to life. So yeah, to your point, we've held and we've added through all the downturn. Now it's time to enjoy the upward swing. And I totally agree about taking some off the top. If it's gotten to a point in your portfolio where either the position's gotten too big, or to your point, I just bought this at $10 a month ago and I'm up 50%. Take some of it out, let the rest of it ride.
Agreed. Anything left to add before we end this?
Yes, actually, a little more about SoFi.
Go for
it. Finally, I think I'm on track to be a SoFi Plus member.
Welcome to the team.
Yeah, so I got my direct deposit set up at work. We'll see what happens.
Yeah, I think
I like a lot of the rewards they've implemented.
Yes, and sure, the interest rate has been coming down, but that means the economy's doing better. So I just want everybody to kind of set the expectations. We're not going to leave you at a 5% interest rate in a booming economy. That's just, it's not going to happen. So interest rates lowering means everything else is doing extremely well. Yeah,
I mean, pretty much my entire adult life has been at almost zero interest rates, so it's been nice the last couple of years with high interest rates in that regard. But it bites you on the other side with mortgages and anything else, credit cards. So.
Agreed. Anything else?
No, I think that's it this time.
Awesome. Well, I just want to thank everybody for tuning into this episode on Unfoolish Investing. If you found the analysis helpful, please subscribe to our podcast and leave a review. Hit the comments below. Stay informed, stay invested, and we'll catch you in the next episode because we want you to stay
unfoolish.
Amen to that, Larry. Amen to that. Till next time.